Hi everybody, and welcome to the start of the holiday season for 2023, and greetings to our new subscribers. This week, we've got an indicator that reminded me of a very nervous cat on the default settings. Not that it's difficult to use, but rather a testament to the reactivity with price action, which naturally tells us that it has very little lag. So that being the case, sit down, buckle up, and hang on. Just kidding. I just wanted to add a bit of dramatic flair. Anyways, sit back and see if this one is for your toolbox. The default settings were just too reactive. There's an image on the blog demonstrating this very thing, so we'll use the random settings we picked off the proverbial dartboard and run with that. So this week, we're going to take a look at a below chart, zero cross, confirmation indicator. The name of this nervous Nelly is the Forecast Oscillator. It was coded for MT4 in 2014 and has some pretty interesting math associated with it. We'll get into that shortly, but we wanted to take a quick sidebar with regard to the word forecast. We hear the word forecast when it comes to weather, something with an ambiguous chance of something else, just to cover ourselves in case we're completely wrong. It's an educated guess. There are some components of this indicator, including regression analysis and least squares methods, which would have you believe that a magical insight exists, so the word forecast is bestowed upon this indicator to pique your interest. As no-nonsense Forex traders, we rely on quantitative data to support our decisions. We trade what we see on the charts. Numbers are numbers, and we stick to those numbers through the use of a series of quantitative tools strung together using Boolean functions. What's it called? Everybody now? That's right, sports fans, an algorithm. Okay, lecture over. So remember, we're just trading what we see. By the way, I wanted to mention that you may want to consider this indicator as your C1 because of its reactivity. We've randomly assigned a length of 54 and price of 4 in the settings as per the blog. Also, stick around because we've got a little something extra right after the initial analysis. So ready, steady.
Let's get ready to rumble!
Due to the frequency of the signals, we won't get into the analysis of each one, but rather, we'll just note it as a win or loss unless there is something remarkable to mention. Otherwise, this video will become a big snooze fest. Okay, the signal line crossed below zero, our first short, and we're back out, then immediately back in on the next short. Unfortunately, the market is somewhat dead, so signals probably won't get us anywhere. All right, we've got a long signal with some momentum. Let's see if it's got any legs. That would be a negative, Ghost Rider. Let's press on with this next short. Not much movement quite yet. There might have been a profit following that one largish move down and subsequent drifting before the long signal. And finally, some decent price action. Something for the next trip to the beach? Price moved down before that large bull candle. One of three things would have happened depending on your algorithm in ATR. First, you may have been taken out with an exit indicator, although that big bull candle would have most likely prevented it. That's what we call the FU candle. They're evil little trolls. The second thing, which is most probable, is that you would have moved your stop loss to break even after the initial move down and perhaps taken off half of your trade. So you'd have exited at break even when price backed over it with some profit. The third thing that might have happened is that you used the signal line as your exit and you would have suffered a bit of a loss. Whatever happens, please stick to your rules. And that's a bummer. A small loss for the journal. Oh look, another FU candle. Oh, and a gap. I didn't tell you which market we're looking at, did I? Gaps usually don't happen in the Forex market, but they certainly can happen in the Bitcoin market, which happens to be the chart we're looking at here. But it appears that there was a sufficient move to the downside before that ridiculous bull candle. And a profitable one here. Market volatility is certainly giving you something to pay attention to. And just like that, volatility has vanished. What if we were to add another component? As mentioned, this indicator is pretty quick, so let's combine it with something a little slower. How about last week's indicator, the chandelier exit? We're just going to let this go for a moment and look for a fresh signal to start our analysis. Take a deep breath. All right, our first signal. The Forecast Oscillator has printed below the zero line and the chandelier exit has printed the red signal line. We'll take a moment to break it down step by step before getting back to price action. In this first image, the Forecast Oscillator has closed below the zero line as represented by the blue circle, and a line with its corresponding candle is indicated by the orange line. We'll be assuming your baseline is already in agreement, and we're still sitting on our hands. Now, in this image, the blue circle represents where the chandelier exit indicator has printed a short signal, confirming the overall trade condition. Assuming market volume is acceptable in this third image, the yellow arrow points to the entry. Please understand, we're not using a complete algorithm, so we're taking some liberties here to illustrate how C1 and C2 can work together in harmony. Now let's see what happens. Remember, we're going to ignore the long signal given by the forecast oscillator, as we're definitely not using it as an exit signal. All right, a lot smoother. Notice how many signals were triggered by the forecast oscillator. There would have been profit in this trade. Now, let's break down this next trade. In the first image, we've got the initial long signal as noted in the blue circle. Then we've got the green in this image confirming our long trade condition. We'll assume that market volume is on our side. We'll open the trade where we see the yellow arrow. Let's see how this dog hunts. Much nicer, right? Ignoring all those zero-line shenanigans makes it a lot easier once you've got your initial alert. We'll break this last trade down. We've got the initial zero cross demonstrating that market price may be indicating an upcoming short. Now we've got our secondary confirmation on that short trade. And finally, with market volume giving the proverbial thumbs up, we'll open our short trade. Let's see how it plays out. Yep, that'll get us on our way. Pips for your pocket. A little jittery, right? Even slowed down, it still demonstrated a very quick response to price action. We've always talked about having indicators with different math. One checks the other and vice versa. We felt showing you was worth 1,000 words. When we tested this indicator on its default settings, there were two things that really stood out. The first was the number of trades, which was expected, but the second thing we noticed was that the default ROI percentages were generally higher than many other indicators we profiled. That was a nice surprise. The markets were somewhat soft with two of the markets we tested, but gold and Bitcoin were shining through. We think this has potential and believe you would not be wasting your time if you were to try it out for yourself. It's over at the Stonehill Forex Indicator Library at no cost. If you think it'll help, run with it. If it gave you a headache, there are many others to try. Either way, spending time with it might make you a more profitable trader. You don't need advice. We don't offer any. It's a good arrangement. Besides, it's just numbers. Do the thing and follow your rules. With a combination of knowledge, practice, and a bit of motivation, you can actually do this yourself and probably better than others who pay thousands of dollars for a financial education. This is where we shine. Just slide on over to the Stonehill Forex website. We've got you covered. Many free resources for the taking, a sumptuous deal with Blueberry Markets for non-US traders, and a landing page for information to get you started. Your education can be fast-tracked with a no-nonsense Forex course created alongside VP to ensure we bring you the trading system that took YouTube by storm. And we're the only ones legally permitted to do this. Listen to the message he's left for anybody interested on the course page. You can read about each course module on the site as well, and if you have additional questions, just email us. We'd love to hear from you. Check out the monthly digest where we discuss up-and-coming projects and other useful items. You can sign up right on the website from any of the blog pages, or just click on the email list tab at the top of the page on our website. The next one is coming soon. If you would like the previous one to see what we're doing, email dan@stonehillforex.com with the title, Latest Digest Please, in the subject line. You'll have it within 24 hours. We're also on Facebook, answering all kinds of Forex questions on Quora, and of course generating more helpful YouTube videos on our channel. Go to the website and spend some quality time checking out what we're about. Our only goal is to make you a better trader.